What's up, everybody? It's your boy Orlando, aka King Smitty, and welcome back to my trading journey. As we know, I am making my way up to 100 subscribers. So, before we get started, go ahead and hit that like and subscribe button. I appreciate all the love I've gotten so far, all the support. Thank y'all for rocking with me, for sure. So today, I am going to talk about two stocks I am going to double down on and really average down on. So, of course, this is my trading journey where I'm trying to compare myself to the S&P 500. And you can see year to date, I am up 55.73%, whereas the S&P 500 is only up 9.89%. Right, so far so good. I am beating the S&P 500. I am going to try to make this a pretty quick video for you all. The first stock I am going to double down on or average down on is Digital Turbine, ticker symbol APPS. And once that stock hits around $12.50, I am going to start averaging down on there. As you can see on this little picture I have up here, this image I have up here, it does have a gap that needs to be filled, which can be seen on the 3-month chart. I had that circled in blue. As well, they have their financial conference call coming out on May 24th. So we will see how that affects the stock. If it drops down, it should hit that $12.50 pretty easily, which will allow me to start averaging down. But if it goes extremely well for some reason, that gap could begin to fill, which I don't mind that either. Digital Turbine has recently expanded its partnership with Google Cloud to deliver frictionless apps to install to developers. And as we know, the more frictionless that the app is, the better the app is. We don't like all that freezing and the time it takes to get from one page to another, and just the more frictionless of the app can be, the better the app can be. So they're expanding their partnership with Google. So hopefully that brings a little bit more revenue into them. And you can see that yellow line roughly is it was a resistance line before. As you can see in, was that mid-April? It was a resistance line. It couldn't really break over it. But resistance becomes support. So that's why I'm saying at $12.50, if it drops back down, it should bounce off of that, hopefully. If not, the next support line will be around roughly $11.20. I didn't mark that. But you can see on May 1st, that's roughly where it kind of dropped and bounced off of. And then as well, around March 1st, you can see it was a resistance. It couldn't get above that at one point. So support becomes resistance, resistance becomes support, and as it fills that gap going forward, hopefully, the next real resistance will be around $16 in the short term. So, excuse me. So I'm looking forward to that. The next stock I'm going to double down on is the great Disney, ticker symbol DIS. And is currently sitting on a strong support line. It bounced off of it 5 times. And if you look on the image I circled in purple each time it's bounced off of that support line. So it's a real strong support. So I wouldn't mind starting to average down now at the support line and hoping that it bounces up. But if it drops below $90, I will still continue to average down. I'll probably average down a little bit heavier than I would have been until it hits $85. If it hits $85, because I'm watching the 6-month chart right here, I will let it just free fall possibly and then see where the next bottom happens and then reevaluate this stock for my portfolio. This is all in my long-term portfolio. So as you can see, there's a gap that needs to be filled on Disney as well. I have it in the blue. It's like a little C. So I'm hoping once it bounces off of there, that gap does fill and Disney turns around. If Disney's having issues with their Disney Plus losing a lot of people, a lot of subscribers. I think like 4 point something million, maybe 4.2 million subscribers they lost last quarter. Started talking about taking a lot of things off of Hulu, off of Disney Plus, and then maybe even combining Disney Plus, Hulu, and ESPN all into one package, possibly. If I read that correctly, I would have to recheck that. Um, so I'm hoping, and they just canceled a project here in Florida as well. So a lot of things going on with Disney. I do see it going up in the long term, so that's why it's like this is a good price to average down in. Start bringing my average price down because I started buying heavily. Well, not heavily, but I did start buying in the pandemic, and it has dropped increasingly. So it's a good time to average down on that for me. And you can see on there that yellow line is the $85 resistance line, support line. I'm sorry. So like I said, if it falls below that, I am going to allow it to free fall and see what's going on. But well, so what good is it to look at individual stocks, right? If you don't know what the entire market is doing, because you can look at this, your stocks, and be like, "Oh, I'm bullish on this one. I'm bullish on this one," but then the actual stock market is bearish, right? So now that kind of throws off that stock. Unless something extraordinarily is happening with that stock, it could throw off that stock. So let's look at the S&P 500 really quick, and you can see for the last 6 months it has been in an uptrend. You can see the low was back in November 22, was around $352. It rose up. It had a higher low on January 2023 for $376. Bounced up, came back down, had a higher low at $384, and then in the last month and a half, roughly maybe 2 months, you can see it consolidated between like 408 and 416, just fluttering back and forth. That's where that blue line is right there, that blue box. And then it did recently break out of that box, going upward. So in the short term, I mean, we could see a little run. I think the next resistance would be on the $432 roughly, but of course you have to look at for 420. Not because anything dealing with smoking, but because even numbers like that, 10, 20, 30, 40, tends to be like a mental resistance line and support line. So definitely keep a look at that. But the next real resistance I see is $432. But if I do see this dropping, I could see this dropping to maybe like around 400 to 405, unless it's like a market turnaround. If it's a reversal, then it could drop all the way back to 384 maybe, to the last horizontal support line or resistance line. The support line, sorry, the last horizontal support line. But if it continues to follow this uptrend, then I could definitely see it come back down to like 408, maybe $400. So that's my 2 stocks I'm doubling down on. That's my outlook on the actual stock market. And these are my long-term hold portfolio. In my short-term portfolio, I have been swing trading, day trading in there. I have been doing a little bit better than I was previously. Trying to take profits at no less than 10%. I got one this week around 19.6%. So I had a 20% return when Jerome Powell was speaking, because I know when he's been speaking, the market has been dropping every time he opens his mouth. So I just got ready for that, played a put on that, made a quick 20%. And when it comes to the stock market, what I've learned is you can't try to predict it. The stock market is very unpredictable, but you can react to it. So be reactive and don't try to predict the market. Thank y'all for rocking with me. I appreciate y'all. Catch y'all on the next one, right?